Thank you so much, and welcome to this panel on tax integrity, the final frontier, possibly question mark. But we'll certainly be discussing that today. Unfortunately, we're one panelist down. Chris Hubbard fell ill, so he couldn't make it after all. But I know he was really keen to be here, and I'm hoping we will get a really dynamic discussion either way, and that the audience will also chime in. I'm Sarah Jespersen. I'm a PhD fellow at Copenhagen Business School, studying the intersection between corporate social responsibility, or ESG if you like, and corporate taxation. And I am joined by two panelists, so Ali, whom we know, and Sandra from the EBRD. And I will begin with giving you a chance to introduce yourself and offering a few perspectives on your take on what is tax integrity, and if relevant, how does it stand in relation to tax transparency, which is possibly a more well-known topic. Let's start with you, Sandra, please.
Thank you, Sarah, and good afternoon, everybody. So my name is Sandra Martins-Fernandes. I work for the European Bank for Reconstruction and Development, the EBRD, and I sit within the compliance department. And so I'm associate director and currently leading the team on the domiciliation unit. And domiciliation stands very much for tax integrity due diligence. And so that leads me immediately to what it means for us. And I think there are many meanings, but for us at least it means checking before the bank decides to invest, being it in a form of equity or debt, are our client structures good enough from a tax integrity perspective or not? Do they portray a responsible tax behavior, or do they rather sit on the other side of the fence of more portraying tax avoidance behavior or aggressive tax planning? So that is very much how I see and how I apply, and my team applies on a daily basis tax integrity, and how I link it back to tax transparency, again, with multiple meanings we have already heard this morning. So if we look at tax transparency more from the perspective of automatic exchange of information and common reporting standard, I would say that we definitely take that on board when we see the behavior of our clients. Are they trying to undermine the automatic exchange of information? Or are they meaning that they still have an opaque ownership structure, or do they rather abide by the automatic exchange of information and took the right boxes and self-classification, etc.? So that is something that we take into account on our due diligence. And tax transparency from the perspective of being open about the tax affairs. If we believe that being open about the tax affairs, disclosing where we are located, the companies, moving on the ESG tax agenda is very much to your heart and research, right, Sarah? If we believe that, like with the green agenda, that will lead to responsible tax behavior, and it's not just window dressing or yet another report, then I think that it could help our tax integrity assessment, because it could, on the risk-based approach, could showcase better responsible tax behavior, and therefore we probably be more open to immediately invest with those that are more open on their tax affairs. And I think that I'll stop it there and give the floor to Ali's perspective on this.
Thank you very much. So my name's Ali Kazmi, those of you who don't know me. I'm a managing director at Hans UK, and it's quite it's a road to Damascus moment where I started my career in the securities finance taxation area. Unfortunately, that particular industry sector did not cover itself with glory. I think it's the largest tax fraud. Well, the numbers are very big, anywhere between 30 billion to 60 billion is being talked about in the European sector. And as I said, it's a road to Damascus. I saw the light and the epiphany was there. And I said, let's embrace tax integrity. And I've been doing that since then. And tax integrity, as a term, Sarah, you asked the question, compared with tax transparency, we see these terms being bandied around. Tax transparency is a set of rules and regulations such as FATCA, CRS, QI, and so on, which to me are enforced country by country reporting, and they're important measures. And the way I look at it, most of them, and those of you who are my clients would have seen me walk around. No consultant is complete without a model. So I walk around with this model, a triangle. I'm sure you've seen this, where, you know, for financial institutions, they are in essence intermediaries. Okay. And they take other people's money and apply it. And in the process, they have to look after their own taxation, their proprietary positions. So most of the tax transparency measures have been primarily focused on taking other people's money in when you onboard. There is various regimes now, governance regimes, particularly UK has been at the cutting edge of it, around things like for banks, you have the code of practice, you have senior accounting officer regimes and so on, tax strategy publication, which all look to sort of like govern that, how financial firms manage themselves and pay their taxes across. And perhaps the final frontier is what we've got Sandra here talking about, is how financial firms apply their funds, which is where they're either lending or investing. And I think that's the area which is going to be looked at. I think of it as a triangle, and the complete triangle is what tax integrity is about, whereas tax transparency is a very specific regime-driven approach. I hope I haven't been too long.
No, thanks so much, Ali, for elaborating on your thoughts on tax integrity. So I think that this is a concept that maybe means different things to different people. And I think you've clearly worked with it for a while and have a very elaborate perspective on what it means for you. Could I just take the chance to ask in the room, just a simple hands up, who have worked with a concept of tax integrity or something similar, maybe a different label within the context of your work? Okay, so for those who can't see the hands, that's just a bit under half, I think. So that's fair. That's a really interesting insight, I think, because I think that this is, if not the final frontier, then a new frontier. And we heard one of the panelists earlier comment that this is climbing up the ESG ladder. And on that note, I'd be interested to hear from both of you, Sandra and Ali, what do you think is driving this agenda? Is this something that's coming from your clients, so a demand, an interest from that part, or is it coming from external pushes onto you in terms of regulators pushing for this, the EU taking it more into account in their general ESG framework, or is it something that you think is emerging within the financial service industry, maybe? First to you, Sandra, maybe.
Thank you, Sarah. I mean, I would be lying to say that the bank woke up one day, so thought by itself, the institution, we want to also capture tax integrity. That sounds amazing. No, that was not the way it went. And having worked also before at the European Investment Bank with the same kind of function, also there was not like it went. So it was very much shareholder driven. And of course, the shareholders at the BRD level are not only the EU members, but also the UK, US, Canada, Japan. So very international, diverse, but clearly there was a consensus that the society perceives tax avoidance as a bad behavior, and that EBRD as international financial institution promoting good behavior should play its role and should not engage and invest the monies in clients and their structures, which could be perceived or de facto be really used for tax avoidance and aggressive tax planning. So that is very much stakeholders / shareholder, because of course there for sure has been some NGO driven and pressure there. Where is the money being used? I mean, definitely there are some NGOs report talking about that. Where are they investing? And of course, it doesn't look good to invest in Cayman and other entities, then we need to explain. So it was very much stakeholder driven. And maybe just a very quick word on the immediate reaction that we had internally. Was at both institutions would be, okay, the shareholders want us to do something, so there is this new risk that we need to assess. including the due diligence. Can we do it? What are our peers doing? We are going to lose business. What does it mean? We are not tax authorities. And the most that I always loved and agreed, but of course not to say that I agreed, was, but tax avoidance, sorry, is it defined? Can you share with us the definition? No, it's an undefined term. Aggressive tax planning, is also an undefined term. So how are you going to implement and assess a risk that is not defined? So that I think that was the most common remark, and I have to admit it's quite a fair remark from the banking business throughout before the implementation. So I'll stop it at that. So I think that the summary is it's shareholder driven against the demand of society and the need to do more as part, of course, as a fair taxation agenda as well that the EU is moving, and happy to share more thoughts on that. And then the business itself, immediate reaction, oh no, not yet another risk. Am I going to be competitive? And how can you implement if you cannot even define it? So I think
absolutely. Raising really interesting points. We'll get more onto implementation and some of the practicalities. But first, I'd like to hear from you, Ali. Do you share Sandra's perception of what's driving this, or did you have a different experience?
Slightly different. And I think that's probably because Sandra's experience is very much defined by the type of institution that she represents. You know, we've been doing this type of work, and I hate to say it, but I think we probably are the foremost firm in this area because we specialized in this for so long. And our experience is what happens is most organizations bring us in due to something having gone wrong. Okay, so it's some external or some internal failure, but quite often is driven by an external factor, a stakeholder, usually sort of like you got either bad press from one of the, these non-state actors like Oxfam or whatever, these charities who may have raised it, or you get tax authorities knocking on your door and saying, guys, this isn't going right. Or it may be sometimes internally a bank director or something who's heard some discussion and said, are you doing this? But generally, you're quite right. It isn't an enlightened approach whereby you say, let me become adopt tax integrity. So whilst the factors are externally driven, if we are doing work with organizations, we have a very sophisticated 8-step model for it. It's called Tax Integrity Compliance Program. The first thing we actually do is work at the apex of the organization, which is usually the board of directors, because actually I'm not really interested in what went wrong and how we're going to fix it, because most consultants will come in, fix a particular issue, and it will last, and then 2 years later, it will recur again. Okay. The way to fix it is to actually, so I'm a part-time, I wouldn't say part-time, failed philosopher. I wanted to study philosophy, and my father thought it'd be much better that I do chartered accountancy. Anyway, that's another story. But as a failed philosopher, I was very much into the moral philosophy of Immanuel Kant. And Kant talks about this very important concept of autonomy. You cannot rely on external force giving the law to you. You must give the law to yourself. And that is essentially, there is a link here between tax and what we do is we work with boards and help boards articulate something that resonates with their core values and help them articulate where is it that they want to be from a tax perspective. And that has to have genuine resonance with their core values. And that's why you cannot adopt, and you see this all the time, if you go to the UK's come up with this requirement that you must publish a tax strategy, and they all look the same. And you think, I can't wear Sandra's clothes because they won't fit me. Okay, it's a ridiculous suggestion. And yet we do that all the time. We borrow and cut and paste other people's. It must have a resonance with who you are, and you must search within yourself. And that does require you, one, to force them to genuinely come up with a risk appetite statement. What is your approach to tax risk appetite? Okay. You must look at and undertake a meaningful risk assessment of your different lines of business, because only then can you say the tone at the top, does that resonate with what's happening on the ground in the boiler room? And if it isn't, that's when you start fixing things. But, you know, if we go in and sort of like, I'm working with Andy Smith at Northern Trust, Andy may sort of like say, this is my universe and that's fine, fix it. But if it doesn't resonate with the board, because ultimately Andy represents the board of his organization. Sorry, I'm not picking on you, Andy. They never have problems. Anyway, it's a lengthy answer.
Thanks so much. I think that gets us a little bit more into what does it actually look like? Because I wanted to come back to you, Sandra, just to you've outlined a little bit that you should be going for the good clients and making sure you're not investing in the ones that are having potentially bad behavior or risky behavior. But for you, what are the indicators then of a particular tax integrity or responsible approach to tax?
It's the one that we always keep on asking ourselves whether we got it right or not. So definitely the EBRD itself has a public policy on the domiciliation policy, and there is a clear commitment on assessing the project in scope, which would mean that there is a cross-border angle, because there is a cross-border that could be a tax optimization. That's how we see it. Of course, we all know that we could also optimize and or be aggressive even within the same country, but let's park that one for now. That was really the first risk element to bring us on board, and where myself and my team needs to review the project and confirm compliance with international tax standards. So what would be those, you may ask? So I think there was a lot of discussion also in the boardroom. Are they international? We'll also be looking at the EU. So we also look at our shareholder country standards. Which one should we look? The more the merrier. But I think where we settled was definitely international tax standards, the BEPS minimum standards. And that we will definitely be looking at whether the structure could be considered abusive or not on the BEPS Section 6. Could a certain regime be considered or not as harmful under BEPS Section 5? But definitely the work of the EU, having European in our name, also influences the due diligence, and we definitely are going to take into account all those indices. So I don't know if I'm completely answering your question there, but I mean, what I want to exemplify, so like, what does it mean in practice? So are we, because people sometimes ask, well, are you stopping deals then? Like, is there something? Yes, and I think you can find that on the OCO annual reports that are also public. I mean, things where we see probably the final frontier or a frontier between tax avoidance, legitimate and illegitimate, is on the over complex structure, which has no sound business reasons to be used, and where the client has decided to intertwine jurisdictions one after the other, and maybe they could or not still be used for tax avoidance or even tax evasion, who knows, but they cannot be explained. So that is something that we are definitely going to ask for simplification. Mm-hmm. And the same goes for substance. So if we'll still see a clear abusive structure where is a tax driven, there is no staff outside the EU via EU holding, to invest in the EU, yes, or in our countries or any other non-EU countries of our operations. So I think that's where we would also say, well, you need to be quite open to the tax authorities on how your structure looks like, and give them the opportunity to clarify whether you should be entitled or not to reduce the withholding tax that is due. So it's a bit of trying to get some flesh out what it means in practice in our daily basis, of the type of assessment that we do. I don't know if that answered your question or not.
Yes,
Sarah.
no, it did very much. And I want to bring this back to you, Ali, because you also already commented on this, how to bring this into the operational sphere. And maybe you could elaborate a little bit on what are some of the challenges that you see from going from the apex and the boardroom down to the very operational level.
Sure. So I think you used the term earlier on about responsible tax. You have terms like responsible tax, fair tax, tax morality, and they're all sort of like trying to get towards the same thing. That's why I prefer the term tax integrity, because actually it's a more holistic term. But at heart, you're looking at a values-based approach, which comes top down. So they're establishing principles and values. The other approach, which is the bottom-up approach, which is a rules-based approach. And there, I mean, some of this discussion, and I agree with you, I think this whole discussion about tax evasion and tax avoidance and aggressive tax, in some respects, it's a bit boring, okay? Because if you're having to have that discussion, that means that you haven't thought through what you want out of life. You know, I don't have to sort of like say, could you tell me what the law is? You know, how much can I hurt someone before it becomes illegal or something? You're just not going to do that. Work according to your principles, yes? But the bottom-up approach is very much rules. If it's been legislated, regulated, I don't think you have much of a choice. Okay, you just comply. Now, all these regimes, I think they're almost falling over themselves now. You know, yesterday we had a webinar, I don't know how many of you listened to it, which was about beneficial ownership. And Philip Baker, who's obviously the leading authority, just sort of like, you know, he said in the end, he said, a lot of this discussion about beneficial ownership is redundant because we now have the MLI, the principal purpose test. What are you even talking about it now? Okay, do you really need DAC 6 if you've got, what do you call it? Well, DAC 6 is slightly different, should I say. Do you really need MDR in the UK if you are doing common reporting standard properly? If you're onboarding your clients properly, you're doing AML, KYC, you won't have the need to report. Are you with me? So I think a lot of these regimes are falling over themselves. A lot of the work that really takes place, the ground up, is lining the regimes up and saying, let's not work in silos. They're actually sort of like, it's like these Venn diagrams that they overlap. And you just need to see that there was a Swiss, if I may digress, there was a Swiss private bank, extremely well-known private bank, has managed to pay a lot of money, Len will be pleased, to the American Treasury through fines. And this particular Swiss bank, I met its head of tax and I was sitting down with him, and he really engages on things like tax integrity. He's really interested in this. And he said, I was interested, actually. I asked him, I said, you've built everything. You've paid millions to the Americans. You've paid millions to my fraternity, the tax advisors. Is there anything left to do? He turned around and he said, Ali, I know I do QI right. I know I do FATCA right. I know I see CRS right. And regime after regime, we do it right. The problem is they don't talk to each other. And that's the biggest challenge I've got. So I could be holding incriminating evidence under one regime that violates the other. And I think that's part of the challenge. But going back to your point, I think the regimes out there, whether it's DAC 6 or whatever, you just need to comply and get on with it. There's no much of a choice. If you're not doing it, you're breaking the law. And I think UK's legislation is now very, very strong. It goes directly to the board if you're not complying.
Yes, and I think compliance and risk is clearly very central to this. We heard before how complex tax legislation is. And I think that this is why tax is such an interesting area for ESG, because normally when you think about corporate social responsibility or ESG, it's an area where there isn't a lot of legislation. But here you have a huge legislation, super complex, compliance requirements left, right, and center. And you have to maneuver within that. And as you say, Ali, one of the big challenges is working in silos and not integrating the knowledge and understanding what's going on. And I would add further to that a question relating to, because obviously ESG, corporate social responsibility, has been on corporations' agenda for quite a while now. Lots of knowledge have accrued within CSR departments, ESG departments. To what extent are tax professionals speaking to, communicating with ESG professionals to learn from those areas of expertise and transferring that knowledge onto the tax area and the concept of tax integrity? Is that going on? First to you, maybe Ali, and then Sandra afterwards.
Sure. The answer is no, they're not talking to each other, or not very much. I think, unfortunately, people work on the minimum effort. Tax departments are really resource constrained. Okay, they're finding it difficult to meet existing compliance requirements, let alone venture forth with new things. And that's why they often look for the minimum standard, which is a shame. I think technology is a big factor now. And we mentioned data earlier on. There was various panels who have been talking about similar things. HMRCs, I think it was 300 million they paid British Aerospace, HMRC, for the Connect system. And this is one of the most powerful data mining, it's award-winning, and they had BAE systems built it, so it's military grade sort of like system that scours sort of like all the different available information, and it's making use of AI to build a profile of taxpayers. I would hazard a guess and probably say that it probably knows my tax affairs, my financial affairs better than I do. Okay. And I think that the playing field, or, if you were to look at it, has tilted very much in favor of the tax authorities. So financial firms, particularly financial services firms, that Simon York, until recently, the financial investigations, fraud investigation service at HMRC, I mean, he basically said, financial services firms are considered high risk. We are watching very closely what you're doing. Okay. I think we need to take those words very, very seriously, and to realize that the technology advantage that they have, tax authorities, is far superior, which most tax departments in the financial industry just don't have. So you better be compliant.
Okay, another interesting dimension. But Sandra, I want to take it over to you to hear whether there is any collaborative or communication between your colleagues in the ESG department, CSR department.
Thank you, Sarah. So let's start at definitely tax. Is it part of ESG or not? That is, I think some of us, I mean, it's probably a good question for the to ask the audience. For certain pieces of legislation or back legislation, sorry for that, it's somewhat part of, at least as part of the due diligence, as part of environmental social, should also be looked at the tax affairs, not really defined. Then tax to be reported on needs to be material. What is material? Yeah, I think what I can tell you from practice, that definitely ESG tax, I mean, I think we'll definitely consider as an organization that would be good to be part of it, because obviously without tax, our countries of operations cannot make their transition effort and make all the sustainable development that they need, right? They need money. Without money collected from taxes, you cannot invest in better lives there. And we would be very much keen on helping that movement, assuming here for a moment that it will really lead to better behavior instead of just window dressing or tax strategies that look all alike, or ESG tax that looks all alike. So assuming that for a moment, which I'm not sure, but assuming that would really trigger better and more responsible tax behavior, would be something that would stand behind. But what is our limit? there is no such obligation to comply and to include tax. And even if we want to encourage on a voluntary basis, what is the standard that we are going to ask then? What is it? GRI 207? Is it total tax contribution report? Is it the tax strategy plus tax risk framework enough? So, and that's where we are personally sitting as a responsible investor, which could also play a part on moving the clients where we invest in and provide loans or equity, making them move into that direction. We don't know how, what would satisfy us, what would be good, what would be not. And for now, I can only tell it, even the ones that have told us on fund manager, so fund managers, so pure investment fund managers that told us that they might include tax, they decided not to include tax on the sustainable reporting, simply because they are not obliged to. And the peers are not moving, so they shall also not move. So just also a note there that sometimes having compliance and forcing them to make the move, if then the peers do not move, being the first mover is also, like I'm told, a danger, and therefore they are not moving. But I would also be interested to hear also from you, I guess, on that point, like, can we achieve on corporate social responsibility and ESG as part of your research? Can we make really, can it really trigger a change in behavior, if I may? Query.
So question to the moderator. So my research is focused on the front runners in this area. So I've been looking at the movement among, includes multinational corporations, but also investors, as you mentioned, and NGOs who are articulating this very clearly. Corporate tax is a part of the corporate social responsibility agenda. And there, my impression and my findings in my research is that there is a clear change in practice, and that it is closely connected to some of the elements that Ali has been onto, this principled, oriented, values-driven sense of how do we align a very heavy, risk-oriented, compliance-oriented practice with a principled and a valued approach that align with our corporate purpose and what we see as corporate purpose. So I would say, yes, it's definitely possible. I think what your question is also alluding to is like, then how do we go from some front runners and some who are developing expertise in this area to a more general movement? And there, maybe I'll ask the question back to you guys. What could help you assist in moving this forward? Would you like to see legislation, or are we then back to the challenges that Ali also encountered, that you also see within organizations, of this conflict between a rule-based versus a principle-based approach? What could be helpful from your perspective, Sandra?
Well, from our perspective, being a IFI, international organization, I think for us it's quite important to have some international agreed standards to which we would refer. And preferably one, but if there would be many that would be all deemed equivalent, I think that would already be a good start. And also, more importantly, also KPIs, right? Like key performance indicators, what do they mean? So because forcing an additional compliance, forcing an additional principle values, and that we all have pages and pages saying that they are very adhering to those high value of paying taxes, and they take taxes responsible, and they respect the spirit of the tax laws. I don't think that is enough. We really need, it needs to have some value. I don't know, like what are your thoughts, Ali? Can we get KPIs out of it? Can we or not?
It's a difficult one, because I mean, I think on one side, often organizations don't move until you have the external pressure. But the problem with that is there is already so much there. Adding one further legislation or regulations, and also sort of like, because you got international businesses, sort of like the Singaporeans are coming up with different rules to the Lux guys, to the UK guys, to the Australians, to the Dutch. It really becomes quite problematic. In an ideal world, I very much prefer the move from within, okay? Because I think even these discussions, one size does not fit all, because that becomes really problematic when the rules are set. We find this, the funds industry has a very different footprint and dynamic than a banking business. And then it's a straitjacket, then you have to fit it in. It would be much easier if we moved from within and said, let's be responsible. But you asked the practical question, how do you implement? The first question I ask is purely around the board. I say, do you see tax as a cost, or do you see tax as a responsibility to society? And that has cultural differences. Okay. A certain president of a very large Western power, former president, saw tax as a gain to reduce and pay the least amount and wouldn't release his tax returns or whatever. I'm not saying I'm taking value judgment, because maybe that's how the the game is played. That's the rules of the game in that environment. Take your country, for example, Denmark. I do a lot of work in Denmark. Part of the problem around the Cumex scandal was the tax authority assumed that people are good and they will self-assess and pay over tax. So it was a real cultural shock that they had been raided, and they were we've discussed a lot about trace through a webinar and also today's session, these tax reclaims. They would just automatically pay out every time a tax reclaim form came in. They didn't bother auditing them. I mean, that wouldn't happen with the UK HMRC. I mean, we're slightly skeptical of the whole thing. We would sort of like say, let's go through, have there been double claims on this? I mean, they ended up paying multiple times. No wonder the Danish tax authorities are very upset.
Yeah. I want to ask a last question, a bit in the spirit of some of the earlier panels who've also been around the crystal ball and what you see for the future. I think we heard just from the panel before that one of the reasons that AI cannot replace tax professionals completely is also this notion of taking ethical decisions. And I think that this aligns well with this panel, that there is something beyond risk assessment and compliance standards in the tax profession and in the tax advisory profession. But there has also been a lot of attention around maybe particular tax and the notion of responsibility or integrity in relation to this. But if you look in the crystal ball, where do you see this moving? Is it a fad that's slowly fizzling out, or is it something that will take on and we will see more and more of if you look 10, 15 years ahead? Maybe first to you, Sandra, and then Ali can complete.
Well, I want to believe yes, but which shape and form, I'm not sure. I think there are several ways that it can go about. If tax is really becoming full part of ESG, and the ESG then is a nice label where tax also needs to be ranked, then there will be a tax integrity there. So it's a reporting angle plus being appraised. So that is to be seen. I understand that now ESG rating agencies have already some questions on tax and some KPIs, which seem to be only about how many tax audits do you have open. And sometimes I think also zero tax jurisdictions, but they are already doing something. We just don't know probably what they are doing. But I think that is definitely an area where it will grow, meaning that if the right questions and KPIs are running in the background and one wants to get that label, you will indeed force change, right? Absolutely. And which can come from the inner, but also decided by the inner values, but is very much an exogenous change driven, but can be done with the inner values. And I also think that it more and more will come the need for the tax avoidance. I think it is still very much on the agenda, that social is not seen as perceived well, and that is less openness from society, employees, clients of different groups of they want to have a socially and responsible tax. Employer, bank, whoever they engage with. So I think that will drive the agenda forward in different angles.
Well, I have a slightly conflict of interest. because I told you from the road to Damascus moment, we are completely behind tax integrity. That is the flag that we fly. And that is where we see the future going. And I think I completely agree with you. I think there's some fundamental drivers around that. I think I mentioned to you the technology of tax authorities. I think there are other factors that are also in play. I think there's within society, things have changed.
Mhm.
Yeah. So there's a fundamental shift in society of what people expect. And I think firms within also having to find, and it is things like ESG that are forcing these kind of discussions. And the thing is, really, is it really about ETR management? Or do we have a role? Which societies are we operating? And it's very much to do with sustainability, not in the environmental sense, but sustainability. That is our firm going to be able to survive this? I mean, you had the case, I think it was one of the coffee shops who basically said, we'll voluntarily pay a certain amount of taxes here. And they thought they were doing the UK Exchequer a favor. Well, that went down really badly, did it not? Okay. So I think there is a fundamental shift in society, and the thinking is still, at a very early stage. And, we have spent a lot of time in developing models, thinking about how this can be driven. And it is something which has to be driven at the board level. Because I think goes to the very core of organizations. What are you about? What is your strategy for the next 5, 10, 15 years?
Yeah. Thanks for that. Many insightful comments. We're going to close here. I'm not going to attempt to sum up. I was one of the ones who didn't raise my hand when the question was whether I had used AI. I have not made it there yet, maybe in the future. But I want to thank you both very much for your insights. It's been very interesting. Thank you.